Hello everybody, this is Matador again from freetradingvideos.com. It's 12:15 p.m. Eastern Standard Time, and again the last day of the year, of the decade. Just awesome. I love thinking about that. You know, every day is kind of just one more day that we have to grind it out and work toward our tomorrow. And but this is a bit of a milestone, it seems like. It's fantastic. This morning on the pre-market video, we talked a little bit about being careful going long into an up gap, into resistance, and some areas of overhead resistance, and then also support on the way back down. A lot of our numbers have hit, which is nice. Again, never want to completely rely on it, but it's nice to have as a benchmark. So for the move up into the 112.80 on this little 3-minute chart of the S&P 500 ETF, the spiders, you can see why that was an area of resistance, not just from today, but the few days before. So this resistance, support, big breakdowns, resistance, resistance, bit of a test there, and then a big sell-off all at once. That was a line that we had drawn in from a long time ago. So nice to have this in our camp to watch out for. This would again have been another good one right through here, this swing high, and then the 113 mark, and this swing high. So just shy of that. Nice to have this area to watch out for. The support areas are also holding. If I zoom back in here, we are around the 112.20 mark, a good test of that now with a higher swing low, another higher swing low, and the symmetrical triangle formation at what was once support, not just a few times, but many, and then a good solid breakdown of that with good volume, and then capitulation here on the increased volume after many, many bars down in a row, and then we work our way from support back up into here. There's a pretty good greater than 50% retracement from the last swing high. So I know I'm babbling a lot here, but hopefully it makes sense to you. Anyway, good move back up in resistance. That was once support, and this is why part of this consolidation is happening. On a higher time frame, it's a little bit easier to see the 112.20 mark, how significant that is, and is being right now. Big red bar, good resistance into that. So our support lines have held, our resistance lines have held, and the next logical place of support will be the 112 even mark. Again, the next logical place of resistance will still be this 112.60 on a 15-minute chart, and I would say the 112.35 area would also be another one, and 45 then the 60 area. So on a smaller time frame, we've got a few more to work on, but that's what I see in the broad markets. To drill down a little bit, actually let's go broad for just a minute. If we were to close here right now, still looking at a fantastic high base off of a breakout, but on declining volume. So it's not a disaster, but we are looking at a move that's not higher, and that's not at all unexpected. Again, for the last day in the year, decade, into a holiday tomorrow, etc., etc. So let's take a look at the trend. The trend is in the neutral range, just slightly more bearish than bullish after a nice gap down. Nice to have that come back from outer space, at least. The trend Q is now the opposite. It's a little bit more bearish than the trend by X%, so a good thing to watch out for on the long side of things. And the VIX has risen dramatically, at least on this 3-minute chart, looks dramatic, and even on a larger time frame, this 15-minute chart, that was great resistance at 2050, again and again and again, hugged the 50 MA, symmetrical triangle breaks out, and now we're right below the 2060 mark. Even in a higher time frame than that, you can see why this area was so important to watch out for. This 2050 support, 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 symmetrical triangle breakdown on big volume, resistance, resistance, resistance. Sorry, I don't mean to talk about volume here. I get talking about a chart, and it's kind of all the same, but nice to have those rules apply across the board. But good symmetrical triangle, also hugging the 50 MA on a 60-minute chart, and we're working our way higher now. That, along with the trend Q, are definitely pointing to more bearish sentiment than bullish, and that's, again, why we're seeing partly this sell-off, and a great reason to be careful how I go long. So that's what I see in the markets this noon. Hopefully you can apply some of this information going forward, and really is awesome working with everybody in here. It's been a great experience so far, I just love building this with all the people that are involved in this website. And I could gush here for a minute, but the feedback that we've gotten, the way that we've helped people so far, that's a really, really great reward, even above and beyond trading profits. So I want to keep doing that. I know D7 wants to keep doing that, and we're really, really looking forward to how we're going to apply that over the next year with everybody too. So hopefully stick around, and any feedback, of course, is welcome. And again, hope you have a fantastic new year, and I'll be talking to you soon.